Hello everyone, welcome to Market Snapshots for today. As expected, the Indian markets have weakened further and US looks relatively stable. Nifty closed yesterday at 24052, which was 0.66% lower than the prior session. Nifty 500 closed at 23199, which is 0.63% lower than the prior session. Nasdaq gained some momentum, closing at 29586 with a gain of 1.10%, and S&P 500 at a gain of 0.38%. So overall, I mean, no surprises on what market was doing. I have been telling this. The Indian markets have not been looking good mostly after 20th of June onwards. The breath has not been supporting. A lot of momentum was made, but somehow, maybe I think I mean the war started just like this weekend again, and there was a build up again if we consider a week prior also. But then I think the Indian markets had started struggling from 20th June onwards, and I think the bigger reason is FIIs keep pulling off a lot of their investments, and the second bit is dollar keeps rising, which is definitely not good for any emerging market, be it India. This is Nifty 500. The advances were 119 to declines of 381, which is like very poor. New highs 10 to 490. The breath is deteriorating further. Uh, Somehow, uh, I think it was 6th, 7th of June, when the breath in each index except Nifty was down by almost 5%. And back then there was no war news, nothing of that sort. Oil was doing pretty well. Somehow, once that, you know, breakdown in the breath happened, I think the markets never recovered. It is just that they have not like, you know, beaten down, but then I think for sure they're not getting strength as well. So looking at the numbers above 20 EMA, 251 stocks, above 50 EMA, 294 stocks, above 200 EMA, 279 stocks. Deteriorating breath is what I can say. The chart, nothing. I mean, it has become very flattish. This is Nifty 50 going nowhere. I mean, basically, mid of June, mid of July, you have not done anything in Nifty. This is Nifty 500, very similar figure. I mean, for sure, there's a gain of maybe a 1% here, but then um, means the market has not done the way it should have done, and I think the oil for sure is a reason, but I think the bigger problem is the rising dollar, which is definitely not helping the Indian markets. Looking at the overall summary of the market, Nifty 50 is still trading above 50 EMA, so that makes it bullish, but participation is weak and breadth is weak. So I think overall a very poor index to trade. I don't think you should be betting anything in Nifty 50. Nifty 500, similar story. I mean, just better than Nifty 50, I would say. The trend is positive, bullish, participation is weak, and the breadth is mixed. I think matter of time if the market doesn't gives strength. I think it is just matter of time. The breath will keep deteriorating, and even this breath will become weak. So it's time to remain cautious, I would say. See, I mean, I have been saying this. It is not that the entire market is bad. Uh, if you have had positions from the month of prior months like March, April, May, don't liquidate those positions because you are sitting already on a very good profits. Let those winners keep running. But then if you're trying to make positions today, which you should be, keep an exposure of around 50-60%. The reason being the stop losses will keep getting hunted. I mean, the markets are bad. I mean, see, the day starts off pretty well, and then eventually every gain just gets evaporated. So you don't know which thing will work, which will not work. For instance, if you look at Kalyan Jewelers chart in last 4 or 5 trading sessions, it has done very well. But then a lot of very well doing stocks have just evaporated. They have given up their gains. So we don't know who will work, who will not work. While gold has been going down and Kalyan Jewelers is going up, those things are very contradictory. But that is how markets are. You cannot predict, you cannot make certainty in markets, and that is the reason I think you should definitely have an exposure towards smaller indices and broadly in the themes like defense, banking, healthcare. These are the things where you should be betting on smaller cap indexes with an exposure of 50 to 60%, not more than that. This is US market. This is S&P 500. The advances were close to 200 and two declines of 300. Again, this also deteriorated yesterday. New highs pretty much similar, close to what it was in prior session. 20 new highs to 480 new lows. Breadth. I think this is for the first time in 15 odd sessions wherein anything is in orange. The 20 EMA breadth has gone below 300, which is 288, above 50 EMA 318 stocks, above 200 EMA 321 stocks. Overall, I think I won't say very bad, but then I mean it is a much better looking index for sure. I mean I'm not even talking about in terms of comparison with Nasdaq or Russell 2000 or Nifty 50 or Nifty 500. Globally, I think it is a better looking index, and I think it is very well supported by its numbers as well. So good going for S&P 500. This is Nasdaq's chart, which had a gain of almost 1.10% yesterday. A good looking chart at this point of time, not doing much, and the reason is very clear. It has gone sideways. The participation and breadth have not been supportive of the rise. So basically the market, like Nasdaq is not doing much. If we look at S&P 500, the best looking chart for me, it has been very well supported by its breadth and participation. The bigger picture is how consistently it has been supported. So this is where, I think I am looking for my bets. Russell 2000, again, a lot of momentum has lost here, I feel, although it is just trading. It is a very good looking chart, trading almost at its highest level, but then I think the I think a lot is going on here also. A lot of liquidation is happening in the small caps. So majorly, I think the major concentration is happening around about mid cap to large cap. I mean, in US market, and the mega caps in the US, I think they are getting liquidated and the small caps are getting liquidated. And major chunk of money is moving towards maybe mid cap to large cap. That is how US markets are looking. If we look at the overall picture, this is a summary for US markets. US 100 bullish, trading above 50 EMA, participation is mixed, breadth is mixed. S&P 500 bullish, participation mixed, breadth is mixed. Russell 2000 bullish, participation mixed and breadth mixed. So pretty mixed sentiments here. I mean, like I have been saying, the 50-60% exposure is not only about Indian markets. That is how the global play is. It is not giving you very good clues about where the market is heading. It is a mixed bag of a lot of things. I mean, equities will rise, dollar will rise, yields will rise, and Bitcoin will start falling. So I mean, it's a very mixed bag kind of a scenario. If you are already in positions, hold on to those positions. There's no point of panic. I mean, follow your stop losses, and that is how you should be going about it. But then if you're trying to make positions in today's time, I would say be little cautious. The exposure should not be more than 50-60%, and that is how you should be heading towards market. The global macro yields at 4.58. They are ringing the bells. 4.60 is a wide close above monthly close. So I think if that breakout happens, as I have been saying, that won't be good for equities. Dollar at 100.87, like I have been saying, uh, it is just, I think it just keeps hovering at around those 100 levels, which is again not a very good sign for equities. VIX at 1650 is pretty neutral. Bitcoin had a good rally yesterday. I think it gained almost 3000 points. You might, if at all anyone is in very good opportunities intraday on long side, and prior to that, I think it gave very good opportunities on the short side. Even gold had shown certain amount of strength, almost rallied 50-70 points. But then short term perspective, I think Bitcoin is the bet for me. Looking at the chart, dollar just hovering, like going sideways, but then again a very bullish looking chart. If at all it keeps rising, that is a big no-no for equities, that equities will start struggling eventually, and we are already seeing signs of those. This is Bitcoin, like I said, I mean, huge day for Bitcoin. Almost, I think it did some 3000 points. If you would have traded intraday, very good opportunities. I think Bitcoin see, although like it is a very flattish chart from June. If we see last like 30 odd sessions, it has also gone nowhere from here to here. It is at the same place. But then the good part is it just keeps giving a lot of opportunities, trending opportunities even in intraday market. So that is what I like about Bitcoin. And more than that, I think I just find it to be a very highly effective indicator in terms of where the global market sentiments are. So at this point of time, Bitcoin is suggesting that sentiments might return positive. We'll have to wait and watch. No predictions here. Uh, Gold, not much happening here. But then yesterday, like it began well, almost, tried to cover previous sessions loss, but then somehow it has lost its momentum. It is going nowhere. I think if you're looking at maybe silver is showing some signs of strength. So maybe in if you want, if you like metals, maybe instead of gold, you can look for opportunities in silver. Gold for time being, I think I'm avoiding. If at all some opportunities come in, I'll definitely have a look into it. But for time being, I'm not liking it. Overall, my takeaway from the markets would be, for sure you should be in the markets. It is not a time wherein you should close your bets and just should not be looking at your trading terminal. But I would say if you already have existing positions, just hold on to them. I think there are no worries there. But then if you're trying to make new positions, Indian perspective, I think I still like small caps and mid caps, broadly in the themes of uh, healthcare, banking, or consumer durables. And talking about the US markets, I think very similar themes here too. Healthcare, financials, industrials, and Indian markets. You can also look into reality, that is also doing well. So these are some of the sectoral themes which you should be looking into. Small cap and mid cap segment. I think large cap is struggling, and broad smaller cap is also struggling. If you look for broader indices in smaller caps, even they are not looking good. A lot of gains just get evaporated. And like I said, if you're looking for new exposure, the exposure should be around about in the range of 50-60%, not more than that. That because the markets are not showing great of signs of strength. That's all from my side. I hope you all found this useful. Thank you so much and have a good one. See you next time.